What's up, everyone? It's Eric from Option Edge, and today we have a bullish trigger in Visa. Okay, in the last 5 years, when this particular trigger has happened historically, I'm using CML Viz options back tester. So yeah, we were looking at the 5-year historical results. For if this option was to be opened. Okay, so as you can see, we've had a win rate of over 83% and quite a good return. If I click on this tile, average win was about 68.1% with a lower average loss, something I like to see. And then let's look at the 6 months. Maybe it happened in the 6 month, might not have happened. Let's look at 1 year. Okay, so the 1 year had the only loss. So usually we want to limit things that don't have a loss, but you can see within the 2 year also some good results. So I like the chart. Okay, we're at the bottom of the Bollinger Band, red candle, green candle, larger green candle, and this is the 3 inside up trigger. I've talked about this before in some of my other videos. I'll link one of my first videos. I talked about the 3 inside up trigger. I'll link it to it up here. So this is a bullish reversal trigger, and yeah. So the technical open is here. 3 inside up trigger. Stock is below the 60-day RSI while also being under the 21-day exponential moving average. Okay, so historically, this has been a good trade. Let's go back to let's check out 3 years. 3 years, okay, it's 2 to 1. If we go 5 years, it's the same thing we saw before. 5 to 1 win rate, probably. Yep, like we saw before. Okay, and then let's look at the setup for this trade. So it's going to be, we are going to go buy a long call at the 50 delta that has a 60-day expiry, okay? Then we're going to short a 20 delta call that has only a 30-day expiry, okay? So let's go ahead and take a look what we got on Robinhood, okay? So I went out and I purchased the 235 call that expires basically exactly 60 days from today, okay, in October 15th. So let's check out the delta on that one. So that's a little bit over 50, okay? But we're close enough there. The stock price is basically right above 50, okay, right above 235. So we're pretty close to being as at the money as we can be. Okay, and here's our short call. So the short call expires in 9/17. This is 32 days from today, okay? And delta's a little bit higher. And I don't mind going higher on the delta just because it actually reduces my risk by having the more delta neutral you are, the less directional exposure you have. So I don't mind that. So and then let's go ahead and take a look. Give me 1 second. 3. All right, here we're looking at E-Trade. This is what the profit and loss graph looks like. It's remember for this is only showing once the first leg, the September 17th leg expires. That's what this is showing because they can't show you like 2 different ways of. It's hard to show time because we have 2 different expiration dates. So it's very hard on a 2-dimensional plane to show both expiration dates on a profit and loss diagram. So anyway, this shows what the profit and loss will be like up until September 17th, okay? So as you can see, what's good about the blue line, I actually changed to 2 weeks from now. So this is end of August, 8/31. So what's great about diagonals is even if the stock doesn't really move, so the current price of the stock's at just above 235, even if the stock doesn't move for 2 full weeks, we still have time. You can see that we're only down 15 cents if the stock moves down a dime in price. So that's what is so. That's why buying naked calls is usually a good way to lose money. Okay, I like to always pair calls up with by selling calls to hedge. Okay, and the good part about diagonals is that since the option I am selling is a shorter dated option, in many ways I'm still able to remain long, have all the upside of a long option while also reducing risk. So that's it for for today. So I hope you enjoyed this. If you like this stuff, subscribe and like, and send any comments to me. All right. Peace out. And this is not advice. Bye bye.